Happy morning to all of you. Myself E. Kalachelvi, Assistant Professor, Department of Commerce. Now I am going to talk about Week 3, Lecture 3, Departmental Accounting. In this content included final accounts. That is the sum number 1. Mr. Maya carried on cloth business. Following is the list of balance as on 31st/12/18. Particulars column amount, particulars amount values included. Capital value is 30,000. Bills receivable value is 5,000. Sales department 1 and 2. So because two department are included, sales value department 1 and 2 70,000, 30,000. Furnitures value is 1,080. Sundry creditors value 12,000. Bills payable 1,500. General reserve 750. Opening stock of department 1 and 2 is 3,400. Department 2 value is 1,100. Sundry debtors value is 23,000. Rent value is 1,800. Marine insurance 2,400. Purchase value is department 1 and 2 is 43,000 and 25,000. Salaries is 5,400 and office expenses 2,800. Particulars column is mentioned that commission 2,200, advertisement 5,800, bank charges 120, stationery 2,700, telegram 600, discount debtors 1,500, miscellaneous expenses 900, investment equal 6,900, cash in hand 2,500, cash at bank 7,050. The business is divided into two departments, 1 and 2. Apportion the expenses in proportion to the turnover of each department. So these are the adjustments included in this problem. A. Write off 10% depreciation on furniture. B. Provide rupees 300 for bad debts and 2% on debtors for discount. C. The closing stock where department 1 equal to 4,000, department 2 equal to 1,680. D. Increase general reserve by 3,000 rupees. E. Allocate provision for bad debts also in the ratio of 7:3. From the above particular, prepare departmental trading account and profit and loss account and balance sheet as on 31st/12/2018. That is the solution. Departmental trading account. Particulars column, debit and credit side. Opening stock, purchase is included in the debit side. Sales and closing stock is credited in the trading account. So the opening stock of department A, department 1 is 3,400, department 2 is 1,100. Purchase value is department 1 43,000, department 2 is the 25,000. In the credit side, sales value mentioned that 70,000 department 1, 30,000 department 2. By closing stock of department 1 is 4,000, department 2 is 1,680. So the total value is 74,000 credit overall value 74,000 in department 1. Department 2 is 31,680. So the difference between department 1 and 2, that is the gross profit. 74,000. So the difference value is 27,600. That is the gross profit of department 1. 31,680 overall total is. So the difference value is 5,580. That is the gross profit of department 2. It is carry forward. That is the departmental profit and loss account. So already I mentioned that gross profit value is carry forward of PL and account. So the gross profit of credit side you have to mention 27,600. Department 2 value is 5,580. So next thing is in the profit and loss account, all the expenses are mentioned. So what is this? Salary expenses, electricity bill. These are the content, rent. These are the content are mentioned in P&L account. You know very well. So in this problem, these are the category are included. First one is salary. So sales equal 7,000 equal to is to 30,000. So 7:3. So department 1 is 5,400 into 7/10. The value is 3,780. Department 2, 5,400 into 3 is 7:3. So 3 divided by 10 equal to 1620 is department 2. The same procedure is included in office expenses. So 7:3. First department 1 2800 into 7 by 10 equal to 1960. Department 2 2800 into 3 by 10, the value is 840. 2 rent. Sales 70 is to 30. So 7:3, that is the ratio. In this ratio, we have to calculate all the expenses, salary, office expenses and rent also. So department 1 is 1800 into 7:3. So 7 divided by 10. So 1800 into 7 divided by 10, the value is 1260. Department 2 1800 into 3 divided by 10 equal to 540. To marine expenses 2400 into 710 divided by 1680. Department 2 2400 into 3 by 10 equal to 720. To bank charges 120 into 7 by 10 equal to 84. 120 into 3 by 10 equal to 36 rupees is 2. To miscellaneous expenses, department 1 900 into 7 by 10, so 630 is the department 1 value. Department 2 equal to 900 into 3 by 10 equal to 270 is the department value of miscellaneous expenses. To advertisement, department 1 5800 into 7 by 10 equal to 4060. Department 2 5800 into 3 by 10 1740. So 7:3 is the common. Why? Because the sales value is 70,000 is to 30,000. So the ratio of sales 7:3. So 7 plus 3 equal to 10. So 7 by 3. All the expenses you should calculate 7 by 10, 3 by 10. To depreciation on furnitures, the value is 108 into 7 by 10 equal to 75.6. Department 2 108 into 3 by 10 equal to 32.4. To bad debts 300 into 7 by 10 equal to 210. Department 2 300 into 3 by 10 equal to 90. To provision on debtors 554 into 7 by 10 equal to 317.8. 454 into 3 by 10 equal to 136.2. So the overall total is 27,600. In department 2 is 7,988.4. So the difference is to net profit of department 1 is 8,642.6. So the department general profit and loss account, these are the profit or loss account included in the general profit and loss account. Profit and loss account in loss 2,408 rupees 0.4. In credit side, that is the profit, by profit and loss account 8,642.6, that is the loss. So the general reserve is 3,000, already mentioned in this problem. To profit is the overall difference 3,234.2, that is the profit. So overall total in both the side 8,642.6. So that is the balance sheet. Before the balance sheet, we already cleared that trading and P&L account. After the ending period is balance sheet as at 31st/12/18. All the financial year, every financial year, we should find out the balance sheet. So both the column liabilities and asset side. All the responsibility mentioned in the liabilities side, all the expenses, sundry creditors, bills payable included in the liabilities. All the assets are mentioned in the asset side. Furniture, plant, machinery, these are the category included in the asset side. So in liability side, capital plus profit equal to capital is 30,000, add profit. Profit is 3,234.2, that is the profit. So you had, so overall 33,098 rupees, that is the capital plus profit. Sundry creditor 12,000, bills payable 1,500, general reserve plus increase. So general reserve value is 750, increase value is 3,000, so 3,750. In credit side, closing stock of department 1 and 2, 4,000 plus 1,680, that is the 5,680 rupees. Sundry debtors 23,000 minus provision debtors, discount debtors. These are the category we should minus 300 plus 554, that is the 754 rupees you should minus in sundry debtors. 23,000 minus 754 rupees equal to 22,246, that is the final value of sundry debtors. Bills pay are receivable 5,000, furniture minus depreciation. So furniture's value is 1,080, depreciation value always minus in this particular asset. So furniture is 1,080, the depreciation value is 108, the value of difference 972 rupees in the furniture actual asset value. Investment 6,900. Cash in hand 2,500. Cash at bank 7,050. So both the asset and liabilities value is same, 50,348. Thank you. Happy learning.